welcome to the special segment called as MC Pro Select Stock of the Day. I'm your host, Nikki Mirchandani, and in this segment, we bring to you fundamentally strong investment stock ideas. Well, today we are going to be talking about Nestle India, with 63% of its stake held by its promoter, Nestle SA. Is well positioned to capitalize on the dynamic and rapidly expanding Indian market. While India stands as one of the fastest growing markets for the global food and beverage giant, thanks to its vast distribution network encompassing 5.2 million outlets. This extensive reach enables Nestle to efficiently deliver its products to wide consumer base and underscore its higher growth trajectory compared to other players in the fast moving consumer goods sector. Now, let's talk about the performance highlights for the quarter gone by. That's the September quarter. The recent financial results slightly exceeded that of an expectation, reflecting a broad-based performance across categories. Key brands such as KitKat, Nescafe Classic, Nescafe Sunrise, Munch, and Milkmaid delivered solid performance. The double-digit top-line growth was driven by healthy volume expansion and strategic pricing initiatives. In line with this success, the company announced an interim dividend also to an extent of 140 per share. For the period spanning January to September 2023, the sales mix across category demonstrated promising results. Now, in terms of the investment rationale, a couple of reasons there. Let's address the first one for you, which is focused on the semi-urban and rural markets. Now, Nestle's strategy has proven effective, particularly in light of its expanded distribution infrastructure. As rural markets show sign of recovery, the company is well positioned to benefit from increased consumption trends in these regions. Now, thrust on innovation and distribution expansion. That's the second factor out there for you. Nestle has introduced 125 new products in the last 7 to 8 years, with an additional 10 in the pipeline. The contribution from these new product launches is expected to increase from 6% to 10% in the medium term. Furthermore, the integration of the new pet care business has been successfully completed and the products are gaining heightened interest amongst users. Let's look at the other factor, which is benign raw material cost. Nestle has experienced stable raw material prices except for green coffee and cocoa. Notably, inflation in the calendar year 2022 was approximately 5 to 6 times higher than the compounded annual growth rate CAGR of inflation from CY 18 to 20. In response, Nestle implemented pricing action across 50% of its overall portfolio to address these inflationary pressures. Capex plans to aid growth also is a factor which is working in the favor of the company. Nestle has invested over 17,600 crore from calendar year 20 to 22 and plans to allocate an additional 5,000 crore from calendar year 2023 to 25. The investments will primarily focus on capacity expansion. The expansion efforts are anticipated to result in one-third increase in prepared dishes, a one-third increase in confectionery, and the remaining balance will go towards nutrition and coffee products. Now, investment behind brand building also is another factor that is working in the favor of the company. Digital marketing spending has been on the rise in the recent year, now constituting one-third of the company's total media spending. The remaining two-thirds of the budget has been allocated to traditional media channels such as television, radio, and other outdoor mediums. Nestle's commitment to brand investment is expected to remain strong, driven by new product launches and expansion efforts into newer territories. Nestle has experienced volume growth that is driven by increased market penetration across various categories. Setting the stage for double-digit growth, the company expects to maintain healthy margins due to the softening of commodity prices. Additionally, the launch of the global portfolio from Nestle's SA's offering is poised to expand the addressable market size. According to MC Pro, the valuation premium is likely to be sustained, making Nestle an attractive investment option. In terms of the investors seeking moderate returns, they can also consider in adding or accumulating, let's just say, and accumulating Nestle shares as a positive long-term investment, according to MC Pro analysis. Now, let's address the risk factor. The royalty agreement with the parent is due from June 24, and higher rate might impact the near-term earnings for Nestle. With this, it's a wrap. Thank you so much for tuning in.